Welcome to the Stock Market Daily News podcast for Thursday, December 12th, 2025. I'm your host, bringing you yesterday's biggest moves on Wall Street and what you need to know to stay ahead. The major U.S. indexes saw heightened volatility. The S&P 500 closed just below its all-time high after rising 0.7% to 6,886. The Dow Jones edged up slightly, while the tech-heavy Nasdaq struggled, pressured by weakness in artificial intelligence stocks. The headline of the day? Oracle's disappointing earnings sent shockwaves across AI and tech stocks. Today, we'll break down that sell-off, examine Bitcoin's reaction to the Fed's latest decision, talk about gold's surprising potential, and reveal where banks like Morgan Stanley are urging investors to look next. Kicking off with Oracle's earnings miss, Oracle shares slid more than 11% to $197, dragging down the entire AI sector. After Oracle's weaker-than-expected revenue and guidance, major chip makers like Nvidia and AMD also fell. Nvidia dropped 1.6%, while AMD slipped nearly 1.7% pre-market. Even Microsoft, Google, Amazon, and Meta posted softer opens. The result? Nasdaq futures dropped 0.8%, and the S&P 500 futures fell more than 0.5%, reflecting broad concern over the pace and profitability of AI infrastructure investments. Investors are closely watching whether AI spending will keep up with sky-high expectations. Shifting to crypto, Bitcoin stumbled alongside tech stocks, falling nearly 3% to just under $90,000. The move followed the Fed's quarter-point rate cut, which some traders treated as a sell-the-news event. Bitcoin's pullback highlights growing skepticism about risk assets, especially as concerns about corporate debt and delayed cash flows come to the forefront. Speaking of concerns, Big Short investor Michael Burry issued a dire warning about the Federal Reserve's plan to buy $40 billion in Treasury bills, calling it a sign of fragility in the banking system. He notes this move is reminiscent of crisis-era support, suggesting investors stay cautious, especially with bank stocks, while the Fed quietly pumps liquidity into the system. Meanwhile, Morgan Stanley is striking a surprisingly optimistic tone, predicting the U.S. economy is entering a new early cycle phase, despite negative payrolls and rising layoffs. Their analysts highlight rebounding earnings revisions, slowing wage growth, and expectations for continued rate cuts. What's their playbook? Go overweight on consumer discretionary stocks, small caps like the Russell 2000, and financials, as these areas historically outperform in recovery phases. Finally, gold continues its record-setting rally. According to Goldman Sachs, Americans barely own gold, only 0.17% of their financial portfolios, and even modest buying could send prices soaring further. With gold hovering near $4,200 an ounce and up 60% this year, the metal's low U.S. ownership means demand could spike sharply if investors look for diversification amid market uncertainty. To recap, the S&P 500 closed just shy of a record high at 6,886, the Dow gained, and the Nasdaq dipped as tech stocks came under pressure. Oracle's earnings miss weighed heavily, Bitcoin retreated after the Fed decision, and Morgan Stanley sees opportunities ahead in cyclical and smaller cap stocks, while gold's underownership may signal more room to run. Looking ahead, watch for more earnings releases, economic data, and signals from the Fed as markets reassess the risk-reward balance going into year-end. Be sure to subscribe for your daily stock market news update and check our website for more insights and charts. Thanks for listening. Catch you tomorrow.